Hello everyone, welcome to the Ichimoku daily analysis for the S&P 500 for Wednesday, July the 20th, 2011. Well, a continuation of the trend to the upside today. Yesterday's trading we had a very large green body candle, a very bullish candle that broke out above the cloud. Breakout above the cloud is a bullish signal, so we had a buy signal for the S&P 500 based on that breakout to the upside. To add more confidence to that breakout, we actually had a very bullish candle, and that candle also took out the resistance that was offered at the Tenkan-sen, only just closed above there. So some good bullish signs for the market yesterday. Today, however, a lot of that upside momentum has evaporated. Now, we haven't had a change of trend. We have had the market continue with a higher high and a higher low. But if we look at the size of the range, the distance between the high and the low, it's contracted very sharply, and that's not a good sign for this market. What we like to see as a trend continues on its way is the range continuing as the trend moves up to the upside or the downside. And that means that the buyers are becoming more and more eager. In this case, we've had the buyers become less eager. Now, we've also had a red-bodied candle, and that's in stark contrast to the large green body candle for yesterday's trading. And that denotes the sellers making net bearish progress on the day between the open and the close. And they've also closed the market down just below the midpoint level, so they've taken some control of this market, but not very strong control. But this is a spinning top type candle, and that's a candle of indecision. It's not the type of candle that we'd like to see at this stage in this trend, so there is a possibility that we may see a change of trend to the downside. Now, we did see the market find support at this 1324 area. We can see the shadow on the candle as the market tested below there but failed to close below there. That will be an important area for the market in tomorrow's trading. If we do see a change of trend, then we do have very solid support at the cloud, which is at 1317, and this area around 1313. And the support at the cloud extends a fair way down, almost down to 1300, the round number where the market found very solid support. Below there we highlighted this yellow area where there was quite a bit of resistance previously, and here we can see this major swing low extended into that region, and the sellers lost commitment. So very, very strong support down below. To the upside, we have strong resistance at 1332, and that will be a major test for this market. If we can trade above 1332 in a bullish way in the next few days, we will most likely be testing 1344 and possibly testing up to this swing high at around 1356. Having said that, however, with our short-term analysis, we can see that the buyers are no longer supporting this trend to the upside, so there is some doubt about continuation of the trend to the upside. In Ichimoku charts terms, the market is still trading above the cloud, so we have an overall positive bias in this market in big picture terms, with the market trading up above the cloud. The market is bullish in the medium-term time frame by trading up above the Kijun-sen, which is the pink line here, and just slightly bullish in the fast-term time frame by trading just above the Tenkan-sen. So a bullish market, but not terribly bullish in the short-term time frame. Does set this market up for a potential change of trend, but we do need confirmation of that trend. So the low of the current candle becomes very important. We should be looking for a potential lower high and lower low. If we see the market testing the highs early in trading tomorrow, and certainly test above 1332, and we see a bullish close above there, then we could see higher price levels. But really a lot of indecision in this market for today's trading.